How to trade the head and shoulder chart pattern like a pro. How to trade the head and shoulder chart pattern like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. The title of this video is How to Trade the Head and Shoulder Chart Pattern Like a Pro. Before you switch off and run away from this video, I would like to recommend to you to sit down and watch the full length of this video so you may rectify your head and shoulder chart pattern trading mistakes once and for all right? A lot of video has been posted on YouTube, and there are many articles on the webs about the head and shoulder chart pattern. But there is, a missing puzzle that I will share with you today, and that will help you to improve, your head and shoulder chart pattern, trading strategy, all right? So let's get started, my friend. The first thing first, as I explained to traders in the previous video that I recorded about how to trade the double top chart pattern, how to trade, the double bottom chart pattern, how to trade the inverted head and shoulder chart pattern at GEORGETRIO YouTube channel. The first thing that we want to know is where does the pattern form? Whenever it comes to a pattern, whether Fibonacci pattern, alien wave pattern, normal chart pattern, all right, we want to know where and when does the pattern form. It's very important for us, otherwise we are not interested in that pattern. So we want to ascertain first, authenticate that the pattern is at the right place before we can even consider, analyzing the pattern to see whether we will have a chance to trade it or not, all right? So I will put the question back to you. Where does the head and shoulder chart pattern form? Where is the ultimate place for the head and shoulder pattern, to be formed? All right, you need to know. So whenever you see, from today, you see the head and shoulder chart pattern anywhere on a daily chart, weekly chart, hourly chart, 2-hour chart, you want to verify that the head and shoulder chart pattern at least is at the right place, all right? Why do we care? Because if the pattern is at the wrong place, it becomes, a low opportunity trading setup for us, We want to concentrate only on high probability trading setup as we are maturing, as, day trader or swing trader. Very, very important, all right? The old days when we jump on the stochastic overboard, RSI overboard, CCA oversold, buy and sell, only to waste our children's money has passed. It's time for us now to start making excellent trading decisions like professional traders, all right? So, first question first, where does it form? Where and when does the head and shoulder chart pattern form? The first place that we see the head and shoulder chart pattern, all right, is at a resistance level or key level. So whenever I say resistance level, think also about a key level, major key level on the yearly chart, quarterly chart. So the first place where we often see the head and shoulder chart pattern, either it's at a key resistance level, all right, or a key level, a high impact, level on the yearly chart or quarterly chart, Very, very important. That's the first place where we see it. Why? Bearish chart pattern very often are formed on or near a resistance level. Bullish chart pattern are formed on or near a support level. This is what we call a market stable data, a market principle, a truth that remain intact in this messy market, all right? So that's the first place where we see the head and shoulder chart pattern. So we clarify that. We know that when we see a head and shoulder chart pattern at a key level, at a resistance zone, we can give it a bit of chance. That's only the beginning, all right? There is another place where we see the head and shoulder chart pattern. That's the ultimate place where we should see the head and shoulder chart pattern. And I will tell you now, The ultimate place for the head and shoulder chart pattern, all right, is at the end of an uptrend. So if you forget everything else that I say today about the head and shoulder chart pattern, you don't want to forget that the head and shoulder chart pattern, the ultimate place for the head and shoulder chart pattern is at the end of an uptrend. For traders who understand the Elliott wave principle or the multi-wave, the head and shoulder chart pattern is usually formed at the end of the multi-wave. All right, but this video is not about Elliott wave, but I need to mention that very fast to traders. Okay, so I draw my line here. So we also know that. So when we are saying that at the end of an uptrend, it means that on top of a rising channel, because if the price going up, it will be in a rising channel. That is another market stimulator. Okay, if it's going up, it will be in a rising channel. If it's going down, it will be in a declining channel. If it's not going anywhere, it will be consolidating between two horizontal key levels, okay? So, end of an uptrend, that's the best place to see the head and shoulder chart pattern, okay? All right? Great. Now, so look at my drawing. The price is in this blue rising channel. So, went up, pull back, went up, pull back. Here it is at the top. So, in an uptrend, what are we paying attention to? So, price going up, we are paying attention to the high. Is it forming a new higher high? So here it is, it formed this high here, pull back, invitation to buy. So the price form a new higher high and display a new higher low. This is an invitation to buy. But we are paying attention to the high. So what we will do on our chart, we will draw a line at that high. So as it pull back, for that bullish momentum to continue, the price must go above the previous high and find a support. This is just the language of the price. So here it is, it manages, okay, to go above the prior high, which is the blue line there. This is the prior high here. Now it went up to display a new higher high. Great. So we will say that, okay, the bullish progression is intact. So looking at the price on this particular time frame, we will say that everything is okay. But we can go to the higher time frame to check whether truly everything is okay or not. It's not because a financial instrument is in a rising channel on the 15-minute chart, then we can declare that we have a bullish trend. It's not because we see the price in a on the 30-minute chart in a rising channel that we can say that, okay, the medium-term trend is bullish. It may be rising on the 30-minute chart, but the long-term trend can be bearish. Just to mention that. So here it is, it form a new higher high because in an uptrend we are paying attention to the new high. Here it is, it pull back again after a higher high. This is an invitation to buy. Great. So we will draw again a warning line at the prior high. So this is the new high before the pullback. So for this bullish momentum to continue, my friend, it must break above the prior high and find a support. Otherwise, there is a question mark on this bullish progression. So here it is, it went above it and formed a new higher high. One thing that we know, okay, professionals pay attention to when a price form 3 highs like this, higher high, after the third one, they are a little bit careful. Just think of that, okay? I'm not going to talk too much about that, okay? Just to mention it, okay? So now the price form a new higher high. This time it pulled back, but this time look, it pulled back and it went below the prior high. In normal bullish progression, the price should not go beyond the prior high. So here you see it pull back, and it displayed a new high high. As it was pulling back, it didn't go beyond the prior high. This one didn't go beyond that. But this time, after it displayed a new higher high, pulling back, it goes beyond the prior high. What's going on? It shouldn't. It shouldn't. If the bullish momentum is very, very strong, normally it shouldn't go back beyond it. Here it is, it went below it. So we say, what's going on? So after he put down, he went up, but that's from a lower high. So this information comparing this high here and this ultimate high here, we will say that the bullish momentum is diminishing. Why? How do we know? Because the price has failed right here to form a new higher high. Okay? And that's how the head and shoulder chart pattern is formed at the end of an uptrend. So you see, this is the high before the last high, okay? And then it pulled back below the prior high and from this high. So now we have a head and shoulder chart pattern. The left-hand side shoulder, the head, and this is the right-hand side shoulder. This is how the head and shoulder chart pattern is formed at the end of an uptrend. So at this point in time, so trader will see, so you will be here, you see it start going down. Okay, so let me adjust my line. So it start going down. You say, okay, it looks like we're going to have a head and shoulder chart pattern. So because you don't know until it's completed. So you are saying, okay, it looks like we are having a head and shoulder chart pattern. But what you can do at this point in time, you will draw a line at the low before, okay, the head. That's the neckline. So the neckline for the head and shoulder chart pattern is the low before the head. So straight away, as you see the head, and you see it start forming in like this, so you will draw this pink line here and say, probably this will be, okay, the neckline for the head and shoulder chart pattern. So the head and shoulder pattern, we have the left hand side shoulder, the head, and the right hand side shoulder. But the left hand side shoulder sometimes can be equal to the right hand side shoulder, all right? But the most important point, the comparison between the head and the right hand side shoulder is what we are paying attention to. Is the right hand side shoulder lower than the head? It must be, to confirm, okay, the head and shoulder chart pattern, okay, being formed, not completed, but it's being formed, all right? But the head and shoulder chart pattern will be completed, will become, okay, fully completed, only, repeat, only, because all this we see here, forming here, is not yet completed, until the price find a resistance below the neckline. Very, very important. Okay, so I don't want to skip, okay, one level. What we are talking about now is where and when the pattern is formed. It's formed at a resistance level or key level. It's also formed at the end of an uptrend. Okay, there is another time when the head and shoulder pattern is formed. It's also formed in a declining channel. Why? Why can we see a head and shoulder chart pattern in a declining channel? Because it's a bearish pattern. Okay, so a bearish pattern very often will be formed at a resistance zone or in a declining channel, because if you have a bearish progression, sometimes you may see something strange. Okay, so the price goes down. Okay, everybody says it's going down. For one reason or another, price is rally up a bit, okay, and start forming some funny shape here, okay, rally up a bit, and then form a gigantic head and shoulder pattern. You may see part of that head and shoulder pattern be out of the declining channel, but that will be what we call a continuation pattern. All right, so price going down in a declining channel, suddenly the price is rallying up, but was met by what we call a bearish pressure and was capitulating, forming a gigantic head and shoulder pattern. Part of that head and shoulder pattern may not be inside the declining channel. Some part of it may be outside the declining channel, or the pattern may be completely inside a bigger, okay, declining channel. If you project a channel, we may see that a bigger channel is being formed, and we see, okay, first leg of the bearish progression followed by a head and shoulder chart pattern in a declining channel, a bigger declining channel, and then the price will break below the neckline and continue, okay, the progression as it did here, forming what we call A, B, C, D chart pattern. The B to C being a gigantic head and shoulder chart pattern. All right. So another place where we can see the head and shoulder chart pattern is in a declining channel. Sometimes you may see it when a bearish progression is pausing, is slowing down. So priority, blah, 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 forming a gigantic head and shoulder chart pattern, only to break below the neckline and continue to go down. All right. So now we have clarified where and when, okay, the head and shoulder chart pattern is formed. It's formed at a resistance level or key level, all right? It's also formed at the end of an uptrend in a declining channel when, okay, sometimes a bearish trend is pausing or slowing down. So we have clarified now. So whenever you see, okay, a head and shoulder chart pattern, you want to ascertain, okay, that the head and shoulder chart pattern is at least at the right place. That's only the beginning. Okay, so when you ascertain that it's at the right place, doesn't mean just go and sell anyhow. Now we will talk about how do the pro trade the head and shoulder chart pattern. Okay, be ready to learn new things. Okay, so stay with me. I'm going to clear my chart now, and I'm going to show you a real example of a head and shoulder chart pattern. Okay, on the weekly chart. We are now on the weekly chart. This is Apple stock. Okay, listed on the Nasdaq 100. It's also a market leader for the Nasdaq 100. On this weekly chart, try to ignore a little bit my drawing on the chart and pay attention to the price itself. What do you see on this chart? Okay, on the weekly chart. Okay, so we see here a typical formation of a head and shoulder chart pattern. So this is the head here, this is the left hand side shoulder, this is the right hand side shoulder, and the neckline is what? We draw it at the low before the head. So if I change the color of my drawing here, you can see that the neckline for Apple stock head and shoulder chart pattern is the pink line on my chart now. This is the pink line. That's the neckline, the low before the head. So we have the left hand side shoulder, this is the big head, this is the right hand side shoulder, and this is now the neckline. Okay, are you with me? So this is about my drawing here. It is the neckline, look here, the pink line. Exactly the same thing we see for Apple stock here. Okay, it makes sense? All right. So, talking about, now we want to ascertain whether this head and shoulder chart pattern is at the right place. So, look, the price is what? Is in an uptrend, yes or no? So, how do we know it's in an uptrend? It's in a rising channel. Okay, so I'm drawing a channel very fast. Remember the blue channel, okay? We want to ascertain that this, okay? Here it is. So the blue channel, Apple stock, was in a rising channel. You see, this is the high before the last high. The high before the last high, that's the left-hand side shoulder. This is the head here. Boom, it came out of the channel, violating the bullish momentum, okay? So because the price out of the channel is confirming to us that this bullish momentum is diminishing. That's all, it's diminishing. Now the price formed a lower high, which is the right hand side shoulder, in comparison to the head. This is very important for us. This comparison is very important for us. Okay? So this head and shoulder chart pattern is at the right place because the price was in a rising channel. It's also okay coming out of the rising channel. Okay, we have it at the right place. So once you verify that it's taking place at the right place, which means at the end of an uptrend, do not skip the next step. Is he also, ask the next question, is he also at a key level? All right, so this will help us to filter out false head and shoulder chart pattern. So to do the second verification, so first verification is at the end of an uptrend, is coming out of the channel, great. Next verification is here at the key level, all right? So I'm going to go now to the yearly chart, okay? And I'm looking for key levels. So on the yearly chart, what do we call key level? The high, the low, and the median line, okay? All right? The high, the low, and the median line, the opening price and the closing price of any candlestick bar on the yearly chart. These are essential key, support, and resistance level. So where we are now, we are at the, where is the pattern being formed? Okay, so let's go back again to the weekly chart, you'll see clearly. Okay, let's go back to the weekly chart. You see this red line, 12070. Remember the red line. Remember this level also, 13403. It's the head. The zone of 13403, okay? And the right hand side shoulder is in the zone of 12070. So the red line and the green line here. This line, okay, you'll see them on the yearly chart very soon. So let's go to the yearly chart and see whether, okay, we are at a key level, okay? So remember the red line and this one. So the high of 2015 is a 13454. Is it a key level? Yes, it's a key level for 2015. So the high of 2015 is a 134. Okay, 5-4. So this is, you see the price. That's where we are seeing the head and shoulder being formed. Okay, all right. The head and shoulder pattern is being formed at the high of last year. This level here, the red line, is almost equal to the high of 2014. So what is the high of 2014? It's at 119.75, 119.75. So here it is, okay, 120.70 is near the high of 2014. So this is also, okay, a key level. So both lines are key levels on a yearly chart. Okay, Apple stock today is at 105.67. It's also near, okay, 105 is near, okay, the opening price. In fact, the closing price of 2015, the closing price for 2015 is at 105.26. 105.26. All right, that's the opening price for 2015. Do not get confused, because if you see the dark green on my chart like this is a bearish candlestick, okay? So the plain white background for the candlestick is a bullish candlestick. This one here is a bearish candlestick. All right, so don't get confused. This is not a bullish candlestick, by the way, okay? So we are near the opening price today, and the pattern is being formed. You see the 3 point, the head, with the left hand side shoulder and the right hand side shoulder. The spot are still here, near the high of 2015 and also near the high of 2014. So not only the pattern is being formed, okay, at the end of an uptrend, it's also at a key level. So with those two verifications, we are happy to talk about, okay, a head and shoulder chart pattern. But remember what I said to you already, okay? The head and shoulder chart pattern is a bearish chart pattern, and that pattern is not completed until the price finds a resistance below the neckline, critical. What usually takes place, traders sometimes will be sell at the here, at the right hand side shoulder, and forget. All right, that's not the best way forward. But if you sell here and it goes down, be aware that the pattern is not completed until it finds a resistance on the edge of the neckline. So here we are, price D below the neckline, which is the pink line here, now is retesting here. So at this point in time, we will say we have what? A bearish trade setup. But you see the necklines here. Pay attention carefully. This is what we are talking about to traders all the time. Okay, so there is a resistance here, which is, okay, the neckline. But there is another resistance here, which you don't want to forget. I'm going to call out that resistance now in turquoise, okay? This one here, you see here, showing this point, the head to the right-hand side shoulder, okay? So we have this trend line. So what we will say to trader, priority to bearish signal as long as Apple stock stays below this trend line, the turquoise trend line here. Okay, let's color into black, okay? Because I have another turquoise line here. So we will say priority to bearish signal as long as Apple stock, okay, is below this black line. So that's what myself I will say, okay? But when we want to sell, okay, the best place, you see the arrow here that I put here, this is my drawing, we will prefer to sell it on the edge of this trend line, the black line here. That will be a better place to sell. So because the smart money, they want to sell, though everybody wants to sell near the neckline like this. So if, as we are here, we will only use a top-down trading method to trade it. Because the setup now is on the weekly chart, okay? Weekly chart, 4-hour chart for the signal, all right? 15-minute time frame for the entry, for swing trading or position trading. But we know also that there is a better resistance, better place to look for opportunity to sell, which is the edge of, okay, this trend line. Because when you are selling here, you want to ask yourself, where is the best place to hide your stop loss? So trader will place it behind here, which is a huge gap for Apple stock. So there is a risk that you may be taken out of the trade and the price will reach this level before turning around. For those reasons, in order to commit the forbidden trading mistake, which is the violation of the top-down trading method, here it is near the neckline. Okay, maybe we find a resistance here, we place the vertical line here. We switch to the 4-hour chart, waiting for the signal. Will it be a signal? We will see. All right. If it's going to be a signal, breakout, retest, turn around. On the 4-hour chart, the price is rising. It's just come out now. So best scenario, pull back a bit, retest it. But as I explained to you, where we are now, there is a better place to sell, which is the edge of the black line, remember? So it can be a little bit tricky to trade here. Therefore, we must use a top-down trading method to trade it. If the signal fell, we are out before it is too late. All right, you see now? So professional will say, we will prefer it to come down a little bit more, all right, and then go back and retest the edge of the trend line or the median line of this rising channel. The edge of the channel or the median line of the channel. Okay? But let's move on. I'm going to remove my drawing on the 4-hour chart. When we receive a signal on the 4-hour chart, we'll go to the 15-minute time frame or 10-minute time frame to enter the trade. We can zoom into it to 5 minutes to enter the trade. But remember, the best place to look for the best bearish trade setup should be somewhere near the edge of this black line. Okay, you see now? All right, but the neckline is the pink line, which makes it a bit tricky. All right, you see now? So I'm going to go back again to my weekly chart. We are talking about how to trade the head and shoulder chart pattern, okay, like a pro. We understand now, and we know also where the pattern is formed. We know the verification that we need to do, all right? Now we are talking about how to trade it. So what usually takes place, my friend, I'm going to go back to my drawing. So price going up in a rising channel, forming higher lows, higher high, okay? The next thing that we usually see, the price will come out of the rising channel, you see here, coming out of the rising channel, and we try to retest the edge of the rising channel. You see here, Apple stock was inside the blue channel, now push down very fast. Okay, these are some activity here. I don't want to talk. So run fast, and then you will try to retest the edge of the rising channel. But as you can see, Apple stock couldn't reach the edge of the rising channel here. So a lot of traders very often will forget to project the channel. So when the price is out of the rising channel, using market geometry, my friend, you will project the channel in the direction of the price. This will allow you to pinpoint hotspot trading zone. So if you don't know anything about the hotspot trading zone, go to www.stochastic-market.com and learn for free, okay, what is a hotspot trading zone. Very simple, okay? Spend some time on our website, okay, and watch the video, okay? Very simple. All right? So I'm trying to adjust my line to make it truly parallel to the first line. So price out of the original channel, which was supporting the price, this is the rising trend. Now, for the pattern to be formed, we see the price out of the channel, indicating to us that the market has rejected this bullish progression for a while. So now it's out of the channel. The price will attempt to retest the edge of the channel. But there are other places that the price will try to retest, which is also the median line of the projection of our channel. This is what has happened here for Apple stock. So you see now, our original channel is the blue one here. As the price out of it, we project in the direction of the price, and we also pay attention to the median line. So Apple stock, people sold it on the edge of the median line of the projected channel. Can you see it? Am I talking to myself? Too much drawing. Yes, that will allow you to concentrate more, my friend. All right? Okay, so you see now? So they sold it on the edge of the median line of the projected channel. This is a hot spot trading zone. But the best place is on the edge of the channel. So I'm going to go back again to my drawing because I'm speaking slowly so you can understand my beautiful accent that traders love on YouTube. All right? Okay. So the price will attempt, after coming out of the channel, to retest the edge of it. But sometimes, as you can see, it can find a resistance near the median line of the projection of the channel. But sometimes, remember what is going on, my friend. Because the price was in a rising channel before, we can say that the market participants are bullish. We will say more than 70% of market participants are bullish. Otherwise, the stock or the currency will not go up, okay? So we can also say that the market, to a certain degree, is saturated by the bull. So, all right? So as the price came out of the channel, you have to understand that market participants are taking position for long term, for medium term, for short term. So those who are taking position for long term, we don't want the price to be out of the channel. They will try to push it back inside the channel, so the trend may continue. You may see some activity like that. So watch the median line of the projection channel. Watch also the edge of the channel. But sometimes you will see, don't be surprised, the price will go inside the original channel, will not find a resistance near the median line of the projected channel, and will not find a resistance near the edge of the projected of the original channel either. But instead, we go back inside, so to speak, okay, will pierce, okay, the original channel, and we go back inside and find a resistance on the edge of the median line of the original channel. So remember, we can sell near the median line. So for this case that we are studying now, the price couldn't reach the median line of the original channel. This is our original channel. Are you with me? Stay tuned. Follow my cursor and then you won't get confused. This is our original channel, the blue one. Yes or no? So this is the median line. So normally, if it come out of the channel and the bulls are quite aggressive, they will push it back inside the channel and the price will retest the edge of the median line of the original channel. Either the median line of the projected channel or the edge of the original channel or the median line of the original channel. Those are the hotspot trading zone that we must pay attention to when we are dealing with the head and shoulder chart pattern, so we may know what is taking place. But the head and shoulder chart pattern will become truly bearish only if the price finds a resistance below the neckline. Haven't finished here, my friend. Want to share more tips with you so you become a top dog, okay? All right? Head and shoulder pattern trader. So as the professional are paying attention to where and when to enter the trade, they know that this level is very important zone to watch, to sell. So they will be looking for, they will apply top-down trading method here. And if you hit the edge, they will be applying a top-down trading method. This will allow them to control the risk. They hit the median line, they will also apply the top-down trading method. As the price going down, you want to watch the edge of each trail line here. It's going down, you want to pay attention to those levels, okay? There is something else that the professional will do. They will measure the depth of the head and shoulder chart pattern. What do I mean by that? You measure the distance from the head, the top of the head, to the neckline. So you know this is the head, this is the neckline. For my Apple stock here, we have a head and shoulder chart pattern, okay? So we will measure the distance from the head to the neckline. Here it is. I'm going to color that into orange, okay? Are you following me? If you are following me, it means that you are really focused, okay? So now, this measuring stick, as I like to call it, we will project it below the neckline, bringing us to the level of 800. So bearish traders that are getting a bit excited to sell Apple stock, remember the best place somewhere here, using a top-down trading method, will be expecting Apple stock to go down in the worst condition to the level of 8000. That remains to be seen. So as they set a target like this, measuring the distance from the head to the neckline and projecting it below the neckline, okay, they will also divide, okay, the target range into two. So our ultimate bearish target is 800. We divide it into two. The midpoint of our target is somewhere near the level of 9300. 9300. Okay? In that zone. So they will also set a target. You see here? Why Apple stock is turning around here is at the midpoint of the original target. Okay, you see here? All right? So we have the head and shoulder chart pattern, probably below the neckline. Where is it going to? It goes near the midpoint of the original target. So those are the key levels that professionals are watching. So they know where is the neckline, they know where is the ultimate target, they know where is the midpoint of the target. All right? There is something else, my friend. You see this distance from the neck, from the head to the neckline. Once we've done it here also, so the pattern is being formed. We see the left hand side shoulder being formed first. Then we have the head, and then we see the right hand side shoulder being formed. So the price going down. We say, okay, it looks like we're going to have a head and shoulder chart pattern is being formed. We know where the right hand side shoulder is. Can be near the medial line of the projected channel, can be near the edge of the original channel, can be also somewhere near the medial line of the original channel. We know where the right hand side shoulder is likely to be, but the most important thing is that the head should be higher than the right hand side shoulder in normal condition, or at least equal to it. Okay, all right. But as we measure the distance, professional, so I told you they will divide the target into two. Here again, here, as the pattern is being formed, they will also divide, okay, this distance from the neckline to the head into two. Is also a very important key level. So now, what are the key levels you must watch? You must watch the height of the head. You must watch the neckline. You must watch the midpoint of the distance between the head and the neckline, which is this one here. Let's color it now into a black again. Beautiful color. Here it is. So we will be watching the midpoint of the distance from the head to the neckline. Why? Because sometimes the right hand side shoulder will be formed exactly on the edge of the midpoint of the distance between the head and the neckline. Or if the price goes back inside the original channel, as you see here, near the medial line of our original rising channel, and start going down, we will be prepared to take profit near the midpoint of the distance from the head to the neckline. You see that this is what we call navigation. So you know now where we are watching how the ball is played. Here you see that it's near the medial line of the projected channel. It's not the edge of the original channel. It's not, okay, the edge of the medial line of the original channel, okay. We also know that the professional will measure this distance for Apple stock, okay, from the head to the neckline, and they will divide that distance into two. Are you with me? So it's roughly near where we see our right hand side shoulder. So the right hand side shoulder can be near the medial line of the projected channel, near the edge of the original channel, near the medial line of our original channel, or near the midpoint price level of the distance from the head to the neckline. Now, I don't want the video to be too long, and I won't repeat myself again. If there is something you do not understand about what I've said now, you may put your question in the comment section, and in due course, I will record another video to answer your specific question, all right? So for trader that's got more experience, you understand that. So that's how we set it up. But the point I want to clarify here is that a lot of traders know where is the head and shoulder chart pattern price target. They know it's here. So when traders sell here, they say the price is, they will go here, especially swing traders. So 2-3 days, you are in profit, and then you are getting very excited. It's going to get to this point. And then you set your target limit order here to take profit exactly at 8000. Don't do that, okay? That's crazy. Don't do that, my friend. All right? Take profit gradually, okay? Because the market will allow you to re-enter the trade. So here it is. We know that this is the best place to look for opportunity to sell. We use a top-down trading method. We trade it down. So price went down first time. You see this candle here. It's quite nice here, you see, moving average 50. Okay, you see here, price quickly drop below the moving average 50 and then rally up. We are on the weekly chart to retest it here. Break below, retest. Boom, 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 down. So now here we will apply top down. So we want to sell, we want the price to rally. Remember that. You want to sell, don't sell it when it's going down, okay? Sell it when it rally up to a key level on the edge. But traders, when they are selling, they want to see a bearish candle. No, you want to see a bullish candle first. You see here, bullish candle. Here it is. Now take it down, okay? It went down. Somebody sold it first. Now it's trying to go up. Is the person serious seller? If they are serious seller, like hedge fund, bank, they will sell again because they don't want to be taken out of the trade. So probably they took their first profit and our price bouncing up. If they are serious sellers, they will sell again and the price will come back down. All right? and you want to join them, don't go ahead of the big boy, okay? All right, let them go before you. So here it is on the edge. And then you apply a top-down trend. Price going down, watch the channel, watch the key levels. You know where they are now. So you also can make excellent trading decisions, trading the head and shoulder chart pattern like a professional trader. Is there anything else I need to talk about? If I forget something, my friend, put in the comment section. And in due course, okay, I will record another video, okay, to answer your specific question. But before we go, all right, my friend, there's something I need to mention to you. The head and shoulder chart pattern is not a trading signal, all right? It's a trading setup. So when we see the head and shoulder chart pattern, we will validate the head and shoulder chart pattern first. Why do we care? Because it's the foundation of the signal. So a useless trading setup or a useless head and shoulder chart pattern will generate false trading signal. Okay? So when we see it, we validate that the pattern is at the right place, okay? As I did in this video, because I don't want to repeat myself again, okay? Once we have done it and we are happy that, okay, it's happening at a good place, because now you are trading Apple stock, it's a market leader, so it's not too much verification to do because it's a market leader. If, for instance, my friend, you are a swing trader, you are trading, for instance, okay, another stock, okay, Accam. All right, you are trading Accam, and you see the head and shoulder chart pattern. Accam is not a market leader, but it belongs to Nasdaq 100. You will check also the market leaders because the market leaders can change the dynamics of the financial, okay, technical analysis, okay, of the sector. So you are trading any stock. This is about the trading triangle. I will not dwell in it, but I will just mention it to you that the market leaders, okay, we must pay attention to the market leaders because traders, we are trading individual stock, but they don't understand that professionals are using what we call the trading triangle, the market first, the sector, before the individual financial instrument, the heart of the trading triangle, the economy news, the fundamentals, okay, all right, and so on. So once we ascertain that technically speaking it's a good trading setup, go to Google Finance, check the economy news relating to the financial instrument that you are trading, check the market, the S&P 500, okay, check the market leaders. If you are trading a stock that belongs to the Dow 30, check the market leaders. If you want to know about the market leaders of Dow 30 and Nasdaq 100, go to www.dayprotrader.com, click on Market Watch, and you'll see the market leaders. Okay? So now we ascertain that it's a good trading setup. What is the next step? We will apply a top-down trading method. Because once we ascertain that we have a high probability trading setup, we have now green light, so to speak, all right, to proceed to the next step, which is implementation of a top-down trading method. My friend, without a top-down trading method, traders are just hoping that okay, everything works well. Use option and keep your fingers crossed, and hopefully you time the market correctly and everything will work well. But when we are using a top-down trading method, if the signal fell, just come out, my friend, and there will be another opportunity, okay, to find another gorgeous head and shoulder pattern. If the price did below the neckline as it did here, but go back inch above the neckline, all right, as I said to you, see this line here, if it goes back above that trend line, this trend line here, there will be a big question mark on this, okay, head and shoulder chart pattern. The mistake that traders are making when they see a bearish chart pattern, they just sell and think that that's the end of it. You may see this on the head and shoulder chart pattern on the hourly chart. Validate, check the higher time frames, all right, and know when and where the pattern has failed. The key point to watch is the neckline. If the price is going down, it will continue to display lower lows, lower high. So in a downtrend, so we want to sell. If we form a new lower low before rallying up to the edge, that's good for us. So we are paying attention to the low. Here it is, Apple stock. Though we have a head and shoulder chart pattern, has displayed a double bottom bullish chart pattern here. Okay, all right. Will it continue to go up or find a resistance here? We will see. This is the end of this tutorial, and I hope you have learned something from it. We'll make excellent decision, okay? To improve your head and shoulder chart pattern, trading like a pro. One example of top-down trading method, weekly chart for the trading setup. We'll go to the higher time frame to validate the weekly chart trading setup. The signal will occur on the 4-hour chart and the entry on the 50-minute chart. Another example, daily chart for the trading setup, hourly chart for the signal, entry on the 10-minute time frame. Another example, monthly chart for the trading setup. We will check the higher time frame than the monthly chart for validation of the trading setup. We go to the daily chart for the signal, the entry on the hourly chart. We can go on and on, yearly chart, monthly chart, daily chart. All right? Thank you for watching, and we will speak to you very soon. We are the TSTW24 traders talking about how to trade the head and shoulder chart pattern like a pro. Until the next time, enjoy yourself and be very happy. Speak to you soon.